Good afternoon, everyone. Brett Wisnowski, Security National Mortgage Company, mortgage loan officer, coming to you from my South Austin home office on a particularly snowy afternoon in Austin, which is strange. Um, but nonetheless, we're going to enjoy that. Today, I want to talk a little bit about mortgage refinancing and how much you actually stand to save. So I'm going to give you a few examples and talk to you a little bit about that. So obviously, reducing rates is a big deal, but also shaving time off your term is a big deal as well. Even if you don't have a massive reduction in rate, even if you still have a, let's just say a break-even period of 36 months, and I'll explain that as well, you still have the opportunity to reinvest those savings back into your principal and save even more money. So really, in this rate environment, you would be looking to refinance, purchase if you've been thinking about purchasing for a while, or of course, if you'd like to purchase an investment property, now is a prime time as well. If you're asking yourself if you're a good candidate, just offhand, I would say if you have a primary residence rate of 3.375 or more, or a investment property rate of, let's call it 3.750, so 3 3/4 or more, you're a fantastic candidate. And it never hurts to look at the numbers. I can do that without having to do an application. I can do that from your most recent mortgage statement, and I'll show you how here in just a second. So anyhow, I hope that you enjoy my information on refinancing. And of course, if you have any questions, you can certainly reach out to me. My email is at the bottom. Feel free to ask questions. Feel free to call me if you have any questions. If you think you may be a good refinance candidate, or if you're a real estate agent and you think maybe my clients are a good refinance candidate, then absolutely feel free to reach out and let's talk about that. Hope you enjoy. I created in an Excel spreadsheet. This is an amortization table. I built this for this purpose exactly, or of course just to have handy in case I needed it. So it was a good time investment for me. But what I'm going to use this today for is to show you a cost analysis and basically what I do, but I'm just going to do it in a visual way. So as you can see, amortization table, this isn't too crazy. Then we have some visual representations and graphs in case your client likes to see things visually. I know I do, so that works out pretty well. So I went ahead and preset this up. So let's just say your client's house is now worth $335. Maybe they bought it at $300, but of course, just shy of or just north of 10% appreciation is low for our market. But we're just going to use this number for now. So let's just say we have a house valued at $335. Roughly 31.29% loan to value, so you got equity in it. So the loan balance for your client is somewhere around this ballpark: 230, 178.50, 4% interest rate. So what we're going to do, and what I typically do, is I add $3,500 for titles fees, lenders fees, et cetera, onto this loan just to kind of give me a rough idea of what the new loan might look like. So let's just call it now we're talking about a $234,000 loan. But let's just use this first. So first of all, current principal and interest payment is $1,098.91. So we're going to put that here, $1,098.91. And our new principal and interest payment, even if we went up to what did I say before? Yeah, let's just call it $234,000. But we took the interest rate down maybe to 2.875, which is pretty doable in a 30-year fixed right now for a primary residence. So of course our new payment would be $970.85. So what this means is that your client would save, let's see here, about $128.06 monthly by refinancing. And that's pretty good. So if you take those closing costs that we talked about, $3,500, and then let's just say we wanted to say, hey, how long does this take for me to break even for the cost of doing this loan? And typically, I ask my clients, hey, how long do you intend to stay in the home? If it's beyond this break-even period, which this shouldn't be a dollar value, is 27.33 months, so you're a little bit north of 2 years. This one to me makes a lot of sense, just because you're saving $128 monthly. You're only going a little bit up in loan value, but of course you're keeping your MI off. All things really remain constant other than the fact you're paying less money. But here's where the magic really happens for me, and this is what I always advise my clients to do if they wish. They certainly don't have to. So your now monthly savings of 128.06. So we're going to pop these over here, but first, let's look at the total interest of the loan. Total interest is showing 115,505.09. 115,505.09. Excuse my butterfingers. I don't use my Mac very often. And then we're going to go ahead and pop in this 128.06 over here for additional principal. So to be clear, this is taking the savings from the loan and reinvesting it back into the loan as additional principal payment. And what that does is it lowers your total interest. So it's also lowering your effective interest rates. 93,000. Well, wait, hold on. I want to put a negative. 93,742 and 73 cents. And again, I don't use this Mac very often, so don't judge me. So what we're going to do in this case is we're going to take this one, of course, just like we did in the other one. Subtract that. That's going to come out to 21,762.36 in additional interest savings on just this loan. So that doesn't count the interest savings that you would get from the other loan. But what it also does, and here's some magic, sorry for making you dizzy if this does, we also are going to be paying this loan off early. That additional 128.08 adds in to your amortization, and you'll be paying that loan off on month 309. So on top of that, you're cutting off 51 months of your loan, even if you refinance to 30 years. So I get that objection a lot. Hey, Brett, I bought 2 years ago. Okay, well, you're 24 months in. You're still cutting off more time, almost double the time, or actually just north of double. Math is hard today. Just north of double of this time that you've already paid. You're cutting off of the loan by simply just reinvesting your principal and interest savings and paying the same amount you already are. You're just paying yourself. You're saving quite a bit of money there. So I just wanted to show all my clients and everyone how this works. This is typically the cost analysis that I do in order to determine if a refinance actually makes sense. And like I said, I can do this with just a mortgage statement. So feel free to reach out to me if you have any questions regarding this. This concludes weekly video number 2. So I hope you enjoyed. I hope it was useful and gave you a little bit of insight on how mortgage financing works on my side in terms of how I calculate how much money someone can save even before getting an application. So if you have any questions on this, feel free to reach out. If you would like to discuss possibly refinancing your home, or if you have a client or friend, family, coworker, anyone that you think may benefit from a refinance, now is the time to do it. The majority of homeowners out there that are actually falling into this category, and in terms of the category, of course, what I'm referring to is the ability to save money. Most of them still have not refinanced. We still have a long ways to go. So I'm definitely here to help. I'm here to help as many of your friends, family, coworkers, clients, anybody you may know that would like an analysis. So please give me a call if you have any questions. Information's at the bottom of the screen. And I appreciate your time today, and I hope you'll join me next week for weekly video number 3. Thank you very much. Bye-bye. Update on was the mortgage-backed securities market, and I'm basically giving you an update based off last week's video. So last week we were here, January 4th. We were at almost an all-time high, or at least a high in relation to the pandemic. Anyhow, so as predicted, there was a correction, as you can see here, and I've also been making it clear to my clients, hey, right now, the market is in short-term turmoil simply because of the Georgia elections and the fact that Wall Street is pricing in a positive thing that Democrats are in the Senate, and also that there's going to be potentially more spending, more stimulus, et cetera, et cetera. So that is priced in positively for the stock market and equities, not so positively for things like mortgage-backed securities and bonds. So anyhow, right now, we've lost some ground, quite a bit of ground, as you can see. We are down just shy of 90 basis points here in this range. I do personally expect it to correct. I think that it'll actually it'll correct probably sometime in the next few weeks. But astonishingly enough, and as you can see, relative to where we have been, this is actually a fairly low point. Just because you're looking at one of the lower points since July, minus a couple of anomalies here. But anyhow, astonishingly enough, rates are actually not hurt nearly as badly as I thought they would be at this point. So despite all of this, we're actually doing great rate-wise still. I'm still showing high twos in a primary residence 30-year refi or purchase. And I was also looking at a couple investment properties this week that were not bad at all. So it's actually quite surprising. Anyhow, I will always, or possibly, it depends on the feedback that you give me, but I may put more of these at the end of my video just to give you an update on where the mortgage-backed securities market is, what rates are doing, so on and so forth. So I hope you enjoyed this video and look forward to it next week.